What if I told you that your smartphone, electric car, and even America's most advanced fighter jets all depend on a handful of obscure minerals that most people have never heard of? And what if China controlled 70% of the global supply? Welcome back to the channel. Today we're diving into the rare earth element sector, a market that's absolutely exploding right now, with some stocks up over 400% in just 6 months. We'll cover 5 stocks positioned to benefit from what could be the biggest supply chain shift of the decade. But first, let's talk about what rare earths actually are. These are 17 metallic elements with names like neodymium, dysprosium, and terbium. Despite the name, they're not actually that rare. They're just incredibly difficult and expensive to extract and process. They're absolutely critical for permanent magnets in electric vehicles, wind turbines, military hardware, and consumer electronics. Here's the problem. China dominates global production, and they just tightened export controls on October 9th. That's why we're seeing this massive rally in Western rare earth companies. So let's jump into the 5 stocks you need to know about. First up is MP Materials, ticker symbol MP on the New York Stock Exchange. This is the heavyweight champion of American rare earth production. MP Materials operates the Mountain Pass mine in California, and this isn't just any mine. It's the only integrated rare earth mining and processing facility in North America. We're talking about a complete supply chain from extraction to processing, all on American soil. The numbers here are staggering. The stock is up 258% in the past 6 months, hitting an all-time high of over $100 on October 14th. The company now has a market cap of nearly $16 billion, making it one of the largest rare earth companies globally. So what makes MP Materials special? 3 things. First, scale. They provide 15% of the world's rare earth production annually. That's massive for a non-Chinese producer. Second, vertical integration. MP just started manufacturing rare earth magnets at their Fort Worth, Texas facility. This is the first fully integrated U.S. rare earth magnet plant, meaning they control everything from mine to finished magnet. That's exactly what the Pentagon wants to see. Speaking of the Pentagon, third point, government backing. The Department of Defense invested $400 million, making the U.S. government the largest shareholder. MP also signed a $500 million deal with Apple to supply magnets made from 100% recycled materials starting in 2027. And just days ago, MP Materials became a prime beneficiary of JP Morgan's massive $1.5 trillion critical minerals initiative announced on October 13th, which includes $10 billion in direct equity investments. Now, here's the reality check. Some analysts are warning the stock may be overvalued at current levels. The run-up has been explosive, and valuations are stretched. But if you believe in U.S. rare earth independence, MP Materials is the cornerstone investment. Next, let's head down under to Australia with Lynas Rare Earths, trading as LYC on the Australian Stock Exchange or LYSDY on the U.S. over-the-counter market. Lynas is the world's largest rare earth producer outside of China, and the stock is up 232% year-to-date in 2025. They operate the Mount Weld mine in Western Australia, one of the richest rare earth deposits on the planet, plus processing facilities in Malaysia and Australia. Here's what's impressive. They just completed their large-scale Kalgoorlie processing facility that came online in November 2024. They exceeded 2,000 tons of rare earth production in Q4 2025, and they're doing it at costs in the lowest quartile globally. That means they're one of the most efficient producers in the world. The company commands a 15 to 20% premium over standard pricing because buyers value a secure Western source of supply. They recently achieved first commercial production of dysprosium oxide and terbium oxide in Malaysia. These are heavy rare earths that are incredibly valuable and strategic. Here's the kicker. Lynas just updated their Mount Weld resource estimate, showing a 92% increase, supporting a mine life of over 20 years. That's long-term supply security that defense contractors and EV manufacturers are desperate for. Lynas also partnered with U.S. magnet manufacturer Novion Magnetics, helping diversify the supply chain away from China. The caution here is, after a 232% run, some analysts, including Macquarie, maintain a neutral rating with an 1850 target price, suggesting limited upside from current levels. But for investors wanting exposure outside the U.S. market, Lynas is the gold standard. Our third pick is Energy Fuels, ticker symbol UUUU on the NYSE or EFR on the Toronto Stock Exchange. This one's a bit different and potentially the most interesting play on this list. Energy Fuels is America's leading uranium producer that successfully pivoted into rare earth production. The stock is up a mind-boggling 487% in the past 6 months. Let that sink in. Nearly a five-bagger in half a year. Here's their unique angle. They operate the White Mesa Mill in Utah, processing both uranium and rare earths from heavy mineral sands. It's a dual-threat business model that gives you exposure to 2 critical mineral sectors at once. They just commissioned their Phase 1 rare earth separation circuit that can produce up to 1,000 metric tons of neodymium praseodymium annually, but they're not stopping there. Phase 2 and 3 expansions are planned to increase production to 4,000 to 6,000 metric tons annually. Here's what really caught my attention. Energy Fuels is the first U.S. company producing separated heavy rare earth element oxides from commercial ores. Heavy rare earths, elements like dysprosium, terbium, and samarium, are even more critical and valuable than the light rare earths. They could achieve commercial-scale heavy rare earth production by Q4 2026. Energy Fuels secured their feedstock pipeline by acquiring Base Resources in 2024, which give them access to Madagascar's Tuliar project and Australia's Donald project. They also have a joint venture with Astron's Donald project that could supply 7,000 to 8,000 metric tons of rare earth concentrate annually starting in 2026. The investment thesis here is diversification, uranium and rare earths with a proven processing facility already operating and a secured supply chain. If you want exposure to multiple critical minerals in one stock, Energy Fuels delivers.
Stock number 4, USA Rare Earth, ticker USAR on the NASDAQ. This stock is up 140% in just the past month, but it's also experiencing significant volatility. This is definitely a high-risk, high-reward play. USA Rare Earth is developing the Round Top Mountain project in Texas, which contains neodymium, dysprosium, terbium, plus gallium, beryllium, and lithium. Round Top is considered one of the highest-grade heavy rare earth deposits in the United States. The stock has been at the center of intense speculation about potential U.S. government investment, particularly with the Trump administration. When rumors swirled about a possible equity stake, the stock skyrocketed. But recent news suggests the government may be favoring other companies like MP Materials instead. Here's what you need to know. USAR is not yet in production. This is a development stage company, which means higher risk than the operating producers we've already discussed. Analysts maintain a strong buy rating, but the average price target of $17.67 actually suggests potential downside from current levels after the recent spike. The stock is extremely sensitive to trade war headlines and government policy signals. If you have a high risk tolerance and believe Round Top will secure government backing and move into production, USAR could deliver massive returns. But this is not a core holding. It's a speculative position at best. Stock number 5, NioCorp Developments, ticker NB on the NASDAQ, with a market cap of just over $200 million. This is the smallest company on our list, but potentially offers the highest growth potential. NioCorp is developing the Elk Creek Critical Minerals project in Nebraska, and here's what makes it unique. It will be North America's only niobium-scandium titanium project with significant rare earth byproducts. Elk Creek is actually the second largest rare earths indicated resource in the United States after Mountain Pass, containing over 630,000 tons of rare earth oxides. The feasibility study shows impressive economics: $2.8 billion pre-tax net present value, a 29.2% internal rate of return, and a 38-year mine life. Even better, all federal, state, and local permits are secured. This is a shovel-ready project. NioCorp just closed a $150.2 million capital raise in October 2025, moving them closer to construction. The company offers exposure to multiple critical minerals, niobium, scandium, titanium, plus rare earths, diversifying revenue streams beyond just rare earth elements. Here's an important detail. Niobium is 100% import-dependent for the United States, primarily sourced from Brazil. If the U.S. wants true supply chain security, they need domestic niobium production. NioCorp would be that source. The catch, they're pre-production, which means execution risk. But with secured permits, completed financing, and strong project economics, NioCorp offers significant upside if they successfully move into production. This is a growth play for investors comfortable with development-stage companies. So why is this sector exploding right now? It comes down to three major catalysts. First, geopolitics. On October 9th, China announced expanded rare earth export controls, restricting 12 of 17 rare earths. They even implemented a foreign direct product rule requiring Chinese approval for exports of products containing even trace amounts of Chinese rare earths. This is China's leverage in the ongoing trade tensions, and it's forcing the West to rapidly develop alternative supply chains. Second, financial backing. J.P. Morgan's $1.5 trillion Security and Resilience Initiative, announced October 13th, includes $10 billion in direct equity investments targeting U.S. critical minerals companies. This is the largest private sector commitment to reshaping America's strategic resource independence. Third, defense applications. Rare earths aren't just for electric vehicles, they're indispensable for U.S. military technology. F-35 fighter jets, Tomahawk missiles, radar systems, night vision equipment all require rare earth permanent magnets. This is a national security issue, not just an investment opportunity. Market analysts at Macquarie forecast a rare earth supply deficit in 2025, with prices potentially peaking at $120 per kilogram by late 2026 to early 2027. That price environment would be extremely favorable for producers. But let's talk risks, because they're real. First, valuation. Many of these stocks have seen explosive runs and may be overheated in the short term. Pullbacks are possible, even likely. Second, China still controls 70% of production and could flood the market to drive prices down and bankrupt Western competitors. They've done it before. Third, these are cyclical commodities. Prices fluctuate and margins compress during downturns. So there you have it. 5 rare earth stocks positioned to benefit from the biggest supply chain realignment in decades. To recap, MP Materials is the established U.S. leader with government backing. Lynas Rare Earths is the trusted Australian powerhouse with 20-plus years of mine life. Energy Fuels offers the unique uranium and rare earths dual exposure. USAR is the high-risk speculative play on government support. And NioCorp is the diversified critical minerals opportunity with multiple revenue streams. This selection gives you geographic diversity across the U.S. and Australia, production stage diversity from operating mines to development projects, and market cap diversity from mega caps to small caps. My personal take? If you're building a position in rare earths, start with the producers that are already generating revenue: MP Materials, Lynas Rare Earth, and Energy Fuels. If you want to add some speculative upside, consider smaller positions in USAR or NioCorp, but understand the higher risk profile. Remember, this isn't financial advice. Do your own research and consider your risk tolerance. But the rare earth sector is undeniably at an inflection point, and these 5 companies are at the center of it. If you found this valuable, smash that like button and subscribe for more investment deep dives. Drop a comment below. Are you bullish on rare earths, or do you think the rally is overdone? I read every comment. Thanks for watching, and I'll see you in the next one.